Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Benny Gantz quits Israel's emergency government, criticizing Benjamin Netanyahu and calling for fresh elections. The Israeli military freed 4 hostages over the weekend. The Hamas-run health ministry says the operation killed more than 270 Palestinians. The Euro weakens the most in almost a month after French President Emmanuel Macron calls a snap legislative vote. That after suffering a defeat in European parliamentary elections. Plus, Bloomberg understands Saudi Arabia allocated about 60% of its $11.2 billion Aramco stock sale to foreign investors. More on that shortly. But it's just gone 8 a.m. across the Emirates. I'm Joanna Versace in Dubai. There is so much we want to get through on the show today, whether it's European elections, the fallout of the results that came through, and of course, Aramco that started trading yesterday. And then we also have the market reaction to those NFP prints that came out on Friday. So very strong reaction in markets, namely in rates markets. We saw a huge upward surprise to that headline print, which catalyzed a 12 to 14 basis point sell-off in rates. What we saw for equities actually was despite a lot of the movement in rates and in FX, S&P still managed to close moderately lower. And today you can see that we're still basically trading around flat into that open. So about 1 basis point move, not a lot either way. Euro Stoxx futures obviously in focus ahead of the open, down 0.4%. This after the market digests some of the news that has emerged over the last 24 hours, namely the fact that the right have done so well in these European elections, even though the centrist parties have managed to maintain a majority. But of course, there will be a lot of commentary about how well some of those parties on the right are doing within Europe. Euro in focus down 0.4%. We've dropped the most in about a month on back of the news. So again, we'll talk more about that on the show. And then Brent still very much in focus. If you rewind back to exactly a week ago, we were trading around this level. We dropped around 2% throughout the course of last week, steadily ground back towards the end of the week as the markets came to terms with what that OPEC Plus announcement meant and the fact that they are being a bit more cautious about the possibility of barrels returning back to the market by the end of this year. So something we're watching out for there. But in terms of our terminal chart today, I do just want to point out the extreme moves that we had in interest rates after that NFP print. And you can see that over the course of 2 days, the 10-year U.S. Treasuries are up 16 basis points. A lot of price action, a lot of volatility in that 10-year yield throughout the course of last week. But again, inching higher towards the end of the week as investors now push back the timing of that first interest rate cut. We're now sitting at around December. And of course, one other thing you want to watch out for this week, we've got the Fed meeting coming up, US CPI on the same day, and a whole ton of auctions to get through as well, 3-year, 10-year, and 30 years. So still a lot happening in markets. But let's get back to our top geopolitical news from the region. And that is that Israeli Prime Minister Benjamin Netanyahu's major domestic rival has resigned from the nation's emergency government over the handling of the war against Hamas. In a televised news conference, Benny Gantz said the Prime Minister was preventing Israel from achieving, quote, true victory in the war, saying politics were getting in the way of strategic decisions. He's called for an election in the fall. Let's bring in our managing editor for the Middle East and North Africa, Honor Ant. Good morning to you. Thank you for joining us on the show, Honor. Let's just piece together the big announcement from Benny Gantz yesterday. What does this actually mean for the Netanyahu government?
Good morning, Joanna. The bottom line from what happened over the weekend in Israel is that this resignation, however important it might be for other reasons, does not pose a direct threat to Netanyahu's actual government. Yes, Benny Gantz, an important political rival with strong backing historically, was an important member of the war cabinet, which was an emergency cabinet, as you said, but the actual cabinet and Netanyahu's survival does not depend on Gantz's own political support. Netanyahu still has 64 lawmakers in a 120-seat parliament, which is called Knesset. So no, Benny Gantz's decision to step down, or what he said was a handling of the war and be a failure to come up with a credible plan to bring back Israeli hostages and to have a credible plan for Gaza post-war is an important decision, but it does not pose a direct threat to Netanyahu in that sense. What is really important is that his departure means Netanyahu will have to rely more on other political supporters, including those on the sort of far right end of the spectrum in Israel. such as Itamar Ben-Gvir, who actually just announced a call for his own inclusion in the war cabinet right after Gantz resigned yesterday. It's just a sign of things to come, of how Netanyahu will have to depend more on those on the right after Gantz withdrew his support for the war cabinet.
Yeah, very political in that sense. Let's just talk about the timeline here, because Benny Gantz was supposed to be giving a speech on Saturday evening. He, of course, postponed it to Sunday evening after the news of that hostage rescue mission that occurred over the weekend. And, of course, Hamas officials are saying that during the course of that operation, over 270 Palestinians were killed. Just walk us through the events of what happened.
Sure. As you said, Gantz actually had imposed a deadline for his demands to be met by Netanyahu government, which burned by Saturday, but he decided to delay it for exactly the reason that you mentioned on Saturday. There was a huge operation and a lot of fatalities, casualties in Gaza, where Israeli troops, apparently special operations units disguised as civilians, launched an operation to rescue 4 Israeli hostages held by Hamas in the Gaza Strip, in a place called Nuseirat. And they did rescue those 4 Israelis. However, in fighting that ensued that operation, and actually that preceded it, according to Hamas officials, more than 270 people got killed, which is probably one of the deadliest days for Gaza since the war began. And according to, again, Hamas officials, some of those killed were children and civilians. Which caused obviously a huge uproar over the weekend, being one of the bloodiest operations since the war began. It also marks the first time Israel itself freed hostages alive since February, when a similar in-purpose operation took place, but that was a lot more narrow in its scope. What does this operation mean is that, so this week, going into this week, we know that U.S. Secretary of State Blinken is visiting the region since the war began. I think this is more than half a dozen times. And again, he's going to try and bridge the gap between Hamas on one hand and the other to reach a truce. But after what happened on Saturday, chances of reaching success in those negotiations will be quite slim.
Yeah, well, his work is certainly cut out for him after the events of the weekend. A lot to grapple with domestically within Israel and, of course, the ramifications of this rescue operation. Honor, thank you so much for joining us today, our managing editor for the Middle East and North Africa, Honor Ant. Now, switching over to European politics, French President Emmanuel Macron has called snap legislative elections after voters dealt his party a massive blow in Sunday's European Parliament elections.
This is a serious and weighty decision, but above all, it is an act of trust. Confidence in you, my dear compatriots, in the ability of the French people to make the just choice for themselves and for future generations.
His Renaissance Party came a distant second to Marine Le Pen's far-right National Party. While the far-right performed strongly in France, Germany and Italy, the alliance of centrist parties in the European Parliament did still hold their majority, which may pave the way for a second term for Commission President Ursula von der Leyen. So really a lot to unpack here. Let's get out to Bloomberg Stephen Carroll, who joins me live now from Brussels. Maybe let's just start with the big news overnight and the fact that Macron is actually calling for these parliamentary elections within France. Pretty bad night for Emmanuel Macron then.
It certainly was, and it's an audacious and bold move by the French president to call these elections now. This is not actually that different from what the polls had been predicting in France. It had been expected that his party would come in with about 15% of the vote. That is where they landed. There'd been some fears they might even come third. They did manage to hold on to second place just by a whisker, but only scoring half of what the National Rally, that far-right party of Marine Le Pen, scored in these elections. And that is a big defeat, certainly for any sitting French president, and it does represent a much wider gap than when Marine Le Pen Pen's party came first in the last elections in 2019. So Emmanuel Macron's choice has been an unexpected one, to go to the country to look for a new mandate in the legislative chamber. It is worth pointing out that Macron's party, although currently the largest in the chamber, had been in a minority and had been governing with some difficulty. Macron has had to use the presidential override to get key measures like the budget passed through Parliament year on year. And what we had seen since the elections in 2022 is an extremely slow-moving legislature and plenty of objections from other sides. So the outlook here could be that we could see an increased representation from the National Rally. They're the third biggest party in the French Parliament, currently holding just under 90 seats there. So a question of what advances they might make. And could Emmanuel Macron end up in a situation last seen under Jacques Chirac, where you have a prime minister from a different party? It's called cohabitation in France. It essentially just signals it's going to be very difficult to get anything done. This at a time when there's already plenty of international concern over the French public finances. We saw a recent downgrade from S&P for them as well, and that might explain some of the market reaction we're seeing this morning.
Yeah, a bit of a gamble there. But look, let's just zoom out, because even though we're talking a lot about the surge of the right and how well some of these far-right parties have done in Europe, at an EU level, the centre still holds. And it looks as though Ursula von der Leyen is going to be likely to win a second term as the Commission president once again.
That's right. Although we were looking at these headlines coming out of Germany, out of France, out of Italy about the strength of those far-right parties, actually at an overall European level, the alliance of the centre-right EPP, the Socialists and Democrats and the Liberal Renew group maintain their majority with a slight adjustment lower, although the EPP actually gained seats, their best election in many years in a European election, as they had been on a downward trajectory. And that led Ursula von der Leyen to tell us at the European Parliament that they had won the election. And when I spoke to Manfred Weber, the president of the EPP, last night, he said that, look, this just sets up exactly that Ursula von der Leyen should be the next Commission president, as she is the candidate of that party. Ursula von der Leyen saying they're starting the outreach from today to those two other parties in their alliance to make sure they can secure that majority for them. It's not quite as simple as that, because it is up to the leaders of the 27 member nations to put Ursula von der Leyen forward for a vote in the European Parliament. In 2019, remember, it was meant to be Manfred Weber, judging by the European Parliament elections, who got that job, and Emmanuel Macron wasn't happy about it, and he was instrumental about getting Ursula von der Leyen there in the first place. So plenty of hurdles to overcome, but certainly a good night for that centrist alliance.
Yeah, no, absolutely. And it also perhaps reduces the probability of Ursula von der Leyen having to reach out to Meloni in Italy to get the votes needed. Bloomberg's Stephen Carroll in Brussels, thank you very much for that overview. All right, switching back to some local stories, and one that we've been following very closely on this program. Foreign investors were allocated about 60% of Saudi Aramco's $11.2 billion stock sale, according to Bloomberg sources. That is a turnaround from the oil giant's 2019 listing, which was largely a local affair. The deal generated strong demand from both the US and Europe, with funds from the UK, Hong Kong and Japan backing the sale that drew orders worth more than $65 billion in total. Shares ended Sunday's trading session 1% higher. Now, joining me now is Bloomberg senior correspondent Matthew Martin, all the way from Riyadh. Wonderful to have you with us on the show. Last week, when we were having a chat about how the book building was going, we were talking about how important it was this time around for Aramco, at least, to get interest from the international community. And it seems as though they were quite successful. 60% foreign allocation. That's quite high.
Yeah, they've done pretty well. And it's obviously a big turnaround from that 2009 stock offering, which, as you mentioned, largely got placed into local investors' hands, many of which were under some degree of political pressure from the government to back this share sale. Now, it's a very different equation. People are looking differently at Aramco. They've got this huge dividend that's being paid out. They're also investing more and trying to diversify the business into other areas like petrochemicals. And also, I think one of the key things as well is that because now Saudi Arabia is a big part of the MSCI Emerging Markets Index, so all of these index tracker funds, regardless of whether you like the stock or not, to some degree, you have to have exposure to Aramco. And so this offering, which sold at around a 6% discount to the stock price, so if you needed Aramco exposure in your funds, why not buy it at a 6% discount? And I think that's a big part of the rationale that a lot of these global funds have had as they've looked at this deal.
Yeah, the MSCI point is an interesting one. You've got a lot of passive investment coming through. I can't help but tie it back to the Saudi Arabian GDP numbers that came out yesterday showing that oil sector declined 11% year on year in the first quarter of the year. And I just, given all the conversations that you and I have had about Saudi's funding needs, it just feels like it makes sense for them to do these types of secondary listings in addition to the plentiful sovereign bond issuance that they've been going down the route of doing this year, simply because the receipts are not coming through from the hydrocarbon sector.
Yeah, that's exactly right. I mean, at the moment, I think, if you look back into 2021, 2022, they were in the country's perfect sweet spot. They had very high production and very high prices. Now you've got sort of the worst of both worlds, pretty low production and fairly low prices, which puts them in this position where they're going to need to increasingly find other ways of drawing money in to try and fund these huge diversification projects that the Crown Prince has launched. I think if you look under the sort of the skin of the GDP numbers, you see that, although obviously GDP is down significantly because of all these OPEC production cuts, on a quarter-on-quarter basis, it's starting to creep back up a little bit as the old year-ago forecasts are rolling out. So you're starting to see some upswing in the economy now, but it's still, the oil industry is still a big drag on those overall headline numbers.
Yeah, and though non-oil is positive, so they would point to that, given their diversification efforts. Matthew, thank you so much. It's wonderful to have you with us in Dubai. Bloomberg's Matthew Martin. Now, still ahead, we will talk investment strategy with Saxo Markets as markets digest developments from the European elections while also watching for the Fed's next steps. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, the euro has weakened to its lowest in almost a month. That after French President Emmanuel Macron calls a snap election in the wake of the European Parliament polls. Let's bring in Charu Chanana, head of FX strategy at Saxo Markets. Charu, good morning to you. Thank you so much for joining our show today. Let me just start with that move in the euro. We're about 0.5% lower, the biggest drop we've seen in the last month. Do you think that reaction is warranted?
Hi, Jamana. Thank you for having me, and good afternoon from this part of the world, actually. But absolutely, I think euros had a double blow after that hot US jobs report that we got on Friday, but of course, more so from the weekend election results that we've been seeing coming out from Europe. And it certainly means like, the pressure is piling up. We've had the ECB rate cut as well. We always knew that the politics in that euro area is not easy, is not going to continue to support the euro in the long run, but it would come that fast as a short-term headwind certainly means that, this is something we need to focus on a little bit more right now, given what it can mean for immigration, what it can mean for geopolitics as well. So I would certainly expect some recovery from that knee-jerk reaction that we've seen, but it seems like the pressure on euro is piling up from here.
Chair, I would have thought that what is more important for the direction of the euro from here is what the ECB decide to do. And last week they went for that hawkish cut. They cut interest rates but didn't signal a lot about the path ahead. Why is that not giving more support to the currency here?
I mean, looking at ECB's decision last week, it is very clear that it came out of a place of pressure because they had signaled it well in advance. So certainly there is some scope here for them to kind of align a little bit more with global central banks, particularly the Fed from here. A series of rate cuts, if they were to embark on an aggressive easing cycle, can certainly mean that we can have long-term inflation expectations picking up again. And some excessive loosening in financial conditions as well. It certainly looks like data is a mixed bag, right? Whether it's in the US or it's in Europe, it's getting harder by the day to really understand what direction data is taking. We're getting so many mixed signals that indicating any clear policy stance at this point is becoming increasingly difficult for central banks. And given that mixed messaging that we got out of the ECB last week, certainly again, that leaves euro more as a, dependent on the US dollar rather than trying to find its own direction.
Right. So let's talk about the US dollar and that NFP print that came out on Friday. I think it surpassed anyone's expectations of where the number was going to fall. And even though we had that slight uptick in the unemployment rate, wage growth still very strong as well. Feels like the investment community are really pushing back the possibility of a rate cut this year. The first rate cut is sitting for December. Does that line up with your thinking as well?
It, again, like I said, right, it seems like the US economy is also on a two-lane path. There are sections of the economy which are suffering because of those high levels of interest rates. And we have seen some economic data starting to weaken over the last few weeks. Even on the labor data side, we've had JOLTS data rising. We've had jobless claims, signaling weakness as well. But then, of course, this NFP print was quite a contrast to what we've been seeing. So there are some sections of the economy that are still holding up quite well to these high levels of interest rates as well. Now, looking ahead to what the Fed signals, particularly this week, I think, again, it is going to remain difficult to judge the progress of the economy and have high conviction in any one direction, whether it is the side of weakening or trying to say that the economy is still strong, which is not the rhetoric that has come out of the Fed in its previous meeting. So again, this will be a meeting where we continue to see data dependency being preached. It will be a meeting where we will continue to get quite a few mixed signals. In fact, on the dot plot, I'm quite worried that it will be a very, very scattered dot plot with different members signaling different kind of expectations, right from one rate cut to even probably 3 rate cuts this year, still being signaled by potentially Chair Powell himself. So I think it will remain something which will be very difficult to read at this point.
Yeah, it doesn't make our life any easier, does it? Trying to piece together all of the hints that they're giving out. Charu, thank you so much. And we'll be watching out for what the Fed says this week. Charu Chanana, head of FX strategy at Saxo Markets. Well, still ahead on our show, we're going to take a look at how markets are reacting to the major geopolitical news out of the region, including Benny Gantz's resignation from Israel's war cabinet. Ebru Pakcan, the head of Middle East and Africa cluster and banking at Citi, joins with her insight. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Bersachi in Dubai. Here are some of the other stories we're watching out for today. Indian Prime Minister Narendra Modi has been sworn in for his third straight term. This after suffering a bruising electoral setback that forced him to share power for the first time. Modi's swearing-in ceremony was held at the president's residence in New Delhi before some 8,000 guests. And before we head out to the break, this is a quick look at some of the top markets that we're watching out for. We'll be back in a moment discussing the reaction from the region to Gantz quitting the Israeli government. This is Horizons Middle East and Africa, our top stories this morning. Benny Gantz quits Israel's emergency government, criticizing Benjamin Netanyahu and calling for fresh elections. The Israeli military freed 4 hostages over the weekend. The Hamas-run health ministry says the operation killed more than 270 Palestinians. And the euro weakens to its lowest in almost a month after French President Emmanuel Macron calls a snap legislative vote. That after suffering a defeat in European parliamentary elections. Plus, Bloomberg understands Saudi Arabia allocated about 60% of its $11.2 billion Aramco stock sale to foreign investors. More on that shortly. Well, it's just gone 8:30 a.m. across the Emirates. I'm Jemana Bersachi in Dubai. Let's just start off this second half of the show taking a look at how some of the key markets have reacted. The key event on Friday was that non-farm payroll figure coming in much higher than expectations. 272,000 jobs created, much higher than the estimates going in. What we did see was a huge repricing of front-end yields. The 2-year note ended the day up about 14 basis points higher. Not so much a lot of change for equities. And today you can see that equity futures are basically leaning sideways sideways around 1 basis point, so not doing that much. But attention now turns to Europe and how European markets are reacting to those European election results as they filter through a bit of a surge for the far-right parties, but the centre managing to hold on to their majority. And you can see that stock futures are seen opening down about 0.5%. The euro also dropping about 0.4%, its biggest drop in the last month. So clearly, those results are having an impact on European assets. And then oil still very much in focus. We are seeing some support come through. Brent sitting just shy of $80, about 0.4% firmer on the session as the market comes to terms with that OPEC Plus announcement from a week ago. Well, switching over to U.S. interest rates, and I did flag earlier on that we saw a big upward move in the front end of the curve. The market is now pricing in the first interest rate cut for December of this year. But here's 10-year notes heading back towards that 4.5% level again, about 15 basis points higher in the last two sessions. Bear in mind, this week we have U.S. CPI, the Fed, and 3-year, 10-year, and 30-year auctions to watch out for as well on the fixed income agenda. But let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, what are you watching out for today? I know it's a holiday in many parts of Asia.
Yeah, we have China, Taiwan, Hong Kong markets shut, so it's pretty quiet. But to your point, as you alluded to earlier about the way U.S. yields are faring, it's prompting the stronger dollar, and that is among the headwinds that we're seeing coming into today's session. For this week, it is not just about the Fed or the U.S. CPI. We also have the BOJ to watch this part of the world, and we are expecting that signals potentially of the reduction of bond purchases from the Japanese Central Bank and potentially how it could prime the markets for a rate hike as early as next month. Some see it, and that is actually prompting pressure on Japan bonds, and the yields are climbing. That's helping to support the financial-related stocks, along with the export-related counters, given the cheap Japanese currency. That's why you're seeing the Japanese benchmark doing okay on a day where it's mostly risk-off. Look at how the South Korean benchmark is faring. And something to keep in mind as well, these expectations of BOJ tightening come despite the GDP numbers revised in Japan that show a smaller than previously thought contraction. I'll flip the board because it's not just the yen that's taking a hit today, it's also some of the other EM peers, and the Korean won is leading the declines amid the stronger dollar, amid risk aversion. We're seeing it losing the most ground in 7 weeks. This is what we're seeing in the Asia Pacific today. Jomana.
Fantastic. Avril, thank you so much for the overview from Singapore. Now let's get back to one of our top stories this morning. Benny Gantz has resigned from Israel's emergency government and called for elections, criticizing Benjamin Netanyahu over his handling of the war against Hamas. In a televised news conference, Gantz accused Netanyahu of hesitating over strategic decisions due to political considerations. For more on what this means for investor sentiment, let's bring in Ebru Pakcan, the head of Middle East and Africa Cluster and Banking at Citi. Good morning to you, Ebru. There's a lot to discuss, but let me just start with all of the developments that have come out of the region, particularly in light of the war going on in Gaza. How has that affected sentiment and deal-making, in your view?
Sure, thank you. I mean, stability, obviously, in the environment is very, very important, both for portfolio investors as well as FDI, which is coming into the region. Having said that, so far, and we are almost into the 9th month of the crisis in the Middle East, the biggest impact we have seen has been around the Red Sea trade routes. Mm-hmm. Red Sea is obviously very, very important. It carries about 20% of these stored goods. And the impact that we have seen so far has been really in terms of the freight charges, which has significantly increased. In fact, over the last few weeks, we have seen some of those increases in the shipping industry. But outside of that, so far, we haven't really seen a lot of impact into the macro environment. In fact, I would say the interest in the GCC economies, especially with investments coming in and the businesses that are ongoing, is actually quite stable.
Yeah. Let me ask you about that. What do you think the interests in the region is predicated on? And I was just discussing with my colleague now about the Aramco secondary sale offering and the fact that 60% was actually allocated to foreign investors. Compare that to 23% back in 2019. It does tell you that maybe in this case it's an idiosyncratic story. People were allured by the appeal of the dividend, but more so, there is a lot of interest in the region. And where is that interest coming from? Why is it there?
Yes, you're absolutely right. I think that, first of all, it demonstrates the confidence in the company itself. in terms of the investments that it is making and the diversification agenda, renewable strategy that it is following. But it also speaks to the strength of Saudi Arabia in terms of the reforms, whether that's in the policy making, whether that's in macroeconomy or social environment, investments in human capital that Saudi Arabia is also making as well. So I think it is demonstrating confidence both in the country, the company, but I would say also in the broader region.
What I think is interesting as well is if you look at deal making around the Middle East, it's been a relative bright spot internationally because there haven't been that many IPOs. The deal making activity around the rest of the world has been quite subdued. What conditions allow for deal making to be so robust right now in the region?
Well, I mean, obviously, we are all aware over the last few years the oil and energy prices have been elevated for various other geopolitical and demand-related reasons, and that liquidity is finding its way into diversification agenda and the vision set by both UAE as well as Saudi Arabia in terms of their ambitions for the next several decades. And we are seeing that liquidity then going into various critical industries, including renewables, but also into technology, lately much more into AI, and also new relationships which are building with Asia, emerging Asia especially, in fact, even with Latin America. So we are seeing the liquidity finding its way from this region into the new and growing parts of the world.
I noticed in Saudi Arabia's GDP yesterday, the oil sector was down 11% year on year. Is that a warning signal about what's to come in the coming years, given, obviously it is still very much an oil-focused region. There have been huge diversification efforts, but at the end of the day, a lot of the receipts still come through from the hydrocarbon sector. Production is lower, prices are lower. What does that mean for the outlook?
I think in the oil industry, still what is very critical is the demand question. In fact, going back to the earlier part of our conversation, even with the crisis in the region, when we look at OPEC's decision last week and the impact of that, still everybody seems to be watching and pricing in more what the demand impact is going to be rather than what is going to be the production decision. So given that demand over the years is going to be probably fluctuating, but coming down over the next few decades, I think we can anticipate that there are going to be some challenges, and that's exactly the diversification and future investment strategy in the region.
Yeah, let me just ask you one final question that wraps in broader conversations that we're having. If we end up being in a higher for longer environment for interest rates, what sort of knock-on effects is that going to have to the region as well in terms of liquidity, access to USD, and how do you think about it from a banking standpoint?
I think what we've seen for our clients, especially the multinational companies which are operating in the broader Middle East and Africa region, liquidity and access to foreign exchange or hard currency has been a major challenge.
Yeah.
With the interest rates coming down in Africa, we have seen several sovereigns going to the market and getting actually reasonably good results, starting with Cote d'Ivoire and then Benin and Kenya. And we've been a big part of that. If the interest rates do not come down or do not come down significantly, the pressure will continue on Africa. So there is a window opening, there is some light at the end of the tunnel, and the sooner interest rates come down, the better it's going to be for investments going back into Africa.
Just one final question on Citi. I should have asked this before, but can you give us an update on Citi's plans to open a headquarter in Saudi Arabia?
So we are very keen to increase our footprint in Saudi Arabia, the largest economy in the region. Obviously, we want to be very much part of that. And we are looking at the regulation and the requirements very, very carefully and thinking about what would be an appropriate way for Citi to be present in the future.
Yeah. Okay. Given what you say, it seems like the outlook is still quite positive as well. Thank you so much for joining us around the desk. That was Ebru Pakcan, the head of Middle East and Africa cluster and banking at Citi. Now, speaking of Saudi Arabia, foreign investors were allocated about 60% of Saudi Aramco's $11.2 billion stock sale, according to Bloomberg sources. That is a turnaround from the oil giant's 2019 listing, which was largely a local affair. Let's get to our equities reporter, Farah Al-Bahrawi. Farah, so yesterday we saw the stock jump about 1%, a bit muted, I would say, given the type of price action that we are used to post IPOs and secondary share offerings. But at the end end of the day, this will be deemed to be a success because of the high percentage of foreign allocation.
Correct. So what really, as you just mentioned, the difference in Aramco this time is that they managed to draw in foreign investors. The major point of attraction here was the dividend yield at 6.6%, the highest among its oil peers. So Aramco, in terms of selling the shares, was successful, but the deal was priced at a discount. Technically, it actually ended up trading higher than what was sold to foreign investors. So maybe they had a little bit of a return there, but the dividend yield is the main play in Aramco at the moment. But the thing to keep in mind here that Aramco fell 13% this year, so that 1% move is really just a very minor rebound, and the focus now has shifted to what the MSCI and FTSE passive inflows will be to the stock. Yeah, because you will get a lot of passive investment coming into the stock as well. That's something that Matthew Martin was telling us about earlier. But let's just look at it in the vein of what the Tadawul Index has done more broadly this year, because it has underperformed other regional indices. What is going on there, and was it just in anticipation of this supply to come? That's a huge part as to why the Saudi Tadawul has lagged not just regional peers, Jumana, but emerging markets peers for the first time since the pandemic. So there's clearly some weakness just related to Saudi ongoing at the moment, and that was due to the Aramco overhang. Investors were trying to save their cash to invest in that IPO. Most of it went to foreigners, and I'm sure Matthew has walked you through all the different groups, but really Aramco is a big part of it, but also there is a geopolitical element going on there, uncertainty about oil prices, but if you look at other regional benchmarks, they're also a little bit weaker this year as well. Yeah, makes sense. Farah, thank you so much for the overview. That was Farah Al-Bahrawi. All right, also coming up, French President Emmanuel Macron gambles on a snap election after a crushing loss to his far-right rival in the weekend's European Parliament poll. We'll have more on what this means for Macron and his alliance. This is Horizons Middle East and Africa. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, the biggest shock in the weekend's European parliamentary election perhaps came from France. Marine Le Pen's national rally managed to secure around double the votes gained by Emmanuel Macron's centrist alliance, prompting the French president to call a snap poll in a bid to try and stop the rise of his far-right rival. Now, the Peterson Institute's Oliver Blanchard, writing on X, Macron's decision to dissolve the assembly and call new elections is smart and the right move. Either the incoherence of the RN program becomes clear during the campaign and it loses the election, or the RN wins, gets the govern, and quickly makes a mess of it. In this case, we get 2 bad years compared to 5 if they won the 2027 elections. That, of course, is just one take. But to dig deeper into what this means, Bloomberg's Caroline Conan joins me live now in Paris. I guess the big question, Caroline, is what is Macron hoping for? What is he up to? Why is he calling these parliamentary elections? It just feels like a massive gamble.
Some say it's actually a gamble. Some say it's quite audacious because clearly there was no other solution at this stage. He tried to change the prime minister a few months ago. That didn't work out. And you saw the results of these European elections with Jordan Bardella, the far right-wing leader in these European elections, getting 32% of the votes, much, much higher than in 2019. They're going to send at least 30 people to the European Parliament, more than double Renew Europe, the party of Emmanuel Macron, with his candidate Valérie Ayé, who struggled to exist during this campaign. Also interestingly, out of these European elections, you got the Socialists coming in third position with Raphael Glucksmann and eating a lot of the Green electorate, who are going to send only 5 seats to the European Parliament. Clearly, there is a high risk with this call for snap elections in France if they do reflect the results that we've seen in the European elections. But the Republicans that Macron was trying to work with during this second mandate since 2022 have said this was the only solution really if they want to keep supporting the very fragile majority that Macron has got at the National Assembly.
Yeah, I think it's important to remind people here that Macron's position as head of state, as president, isn't going to be directly impacted by this vote or the potential vote. But I do wonder about his ability to actually get legislation through, policy making, his big plans for Europe, these political projects. How do you think all of that will unfold?
You're totally right. The president stays no matter what happens on July 7th for these legislative elections. However, if he does get a majority that's even more fragile than the one he currently has, for example, if he has no majority at all and no alliances with the Republicans that he currently has, then he may have to choose a prime minister from a different party. That's what we call in France cohabitation. So it's like a coalition where the president is one party and the prime minister is from a different party. Of course, as Olivier Blanchard was saying in this quote you showed at the beginning of this segment, if the National Rally gets the prime minister job, that may actually mean a lot of shift in terms of policy at the European level, at the French level, more focus on border control, on migration, on frustration, but inflation, perhaps away from the trade deals that we've seen over the past few years. If you get Trump in the US, if you get Le Pen in France, of course, this is a major shift internationally in terms of the trade deals. So a lot can happen if there is a cohabitation, but this is a gamble. Perhaps Emmanuel Macron is trying for a wake-up call of the French, and given the legislative elections are a two-round system, this usually puts the far right and the extremes at a disadvantage.
Yeah, exactly that. The two rounds definitely works in the favor of the incumbents. Caroline, thank you so much for the overview of, the very surprising developments in the last 24 hours coming from France. Caroline Conan in Paris. Also coming up on our show, a strong U.S. jobs print for May fuels further debate on the Fed's rate cut plan. We'll take a look at how markets are reacting to the data next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Versace in Dubai. Well, the debate dividing Fed officials over whether their policy moves are slowing the economy is likely to be energized once more after strong U.S. jobs data on Friday. Traders have already trimmed bets on the number of rate cuts this year. Bloomberg MLive currency and rate strategist Ben Ram joins me here in the studio now. The number was a bit of a surprise on Friday, especially after Jolt's opening. People started to think that perhaps we were going to see some more weakness show up in the labor market. That wasn't the case, and we did see a reaction in USD and in rates on Friday. Is the reaction warranted?
I think so, because we saw yields soar, but what will what will guide yields in the weeks to come is what the Fed does with its dot plot. And I think what are we going to expect from the Fed? We could expect they've already penciled in 3 rate cuts for this year, as you know. So the question is whether they persist with 3 or cut their view down all the way to 0. If they do 0, if they indicate 0 cuts, that will be pretty hawkish. If they say 1, that would be reasonable. If they say 2, that will be dovish. If they say 3, it'll be comical given what's happening with the economy at this point. The other thing I would be watching out for is the core PCE, the forecast for core PCE inflation. As in December last year, they were thinking core PCE is going to average 2.4% this year. That was not to be. Then they then changed it to 2.6 in March. Now the question is they're going to make it 2.7 or 2.8 for the remainder of the year, and that will of course mean that will have implications for the rate cut policy and also the neutral rate. What they need to do with the neutral rate, in the previous meeting they raised it from 250 to 260. Are they going to increase it even further to tell the markets that, look, this is not, we are in a structural change in the economy? So those are the 3 crucial aspects I'll be watching out for.
Yeah, one other thing that's interesting about this week is the US CPI print comes out the same day as the Fed. How is that going to complicate things for investors? Because let's say you have a hot print. Are people going to react to that or just wait and see what happens a couple of hours later when the Fed's announcement comes through?
I think that the Fed's announcement will supersede everything else because the dot plot, what they do with it, is going to have a big effect on yields. I mean, that the Fed has been kind of fighting the economy. They've been trying to, even last year, there was no case for rate cuts, but they penciled in 3, not just 1. And that kind of tells the market that the Fed is fighting the economy. They want to take rates to lower restrictive rates. So far, that hasn't worked in their favor. Let's see what happens going forward.
I just wonder, though, given what you said, how impactful those dot plot forecasts are going to be. Because, as you say, 3 would be just comical, 2 is dovish, but 1 is probably a little bit more hawkish. If we do end up in a 2 scenario, will the market take it seriously?
Well, I think it's still possible because if they signal 2 rate cuts.
First rate cut is not priced in until December now.
Yeah, exactly. Yeah. But so if they pencil in 2, that would mean September and December probably, which is still doable. But then a lot has to go right in the sense for the economy to cave in, for the jobs market to go south. From the looks of it, it doesn't look like. I mean, you don't get a 272K expansion in the jobs front and then expect it to tank the next month.
Yeah.
It looks like we are in this phase. We are going to be in this phase for a lot longer.
Yeah. It's very difficult for central bankers to straddle being data dependent, but then also giving these dot plot forecasts. It's tough for them to give that guidance to the market. Ven, thank you so much for joining me. That was Bloomberg MLI's Ven Ram. And before we head out, just a quick look at equity futures. It's going to be a huge day over in Europe, and you can see that European equity markets are actually seen opening up in the red. Euro stocks seen down 0.4%. Not the case for Wall Street markets. Those are seen trading flat. Well, that is it for our show, however. That is Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.